Good afternoon. This is Uncle Metcalf with TradeOutloud.com. Today's January 20th, 2014, and it is 12:40 p.m. Eastern Time. I'm here to bring you Trade Out Loud's favorite trade of the week. And right in front of us, we have a chart of the Aussie dollar. And actually, this is a 1 hour chart of the Aussie dollar. We have a short bias for this currency pair, so for the Aussie dollar. And we're seeing more selling pressure kicking in at these levels, at these current levels that this currency pair is trading right now. And this is the 88-cent area. Chinese GDP numbers were out last night at 9 p.m. Eastern Time. And the GDP growth was 7.7% in 2013, and this is the lowest level since 1999. This does not come as a surprise, and economists have warned about a slowdown in China. And this for sure is not such a great news for Australia, since Australia relies on China to consume its exports in a massive way. But Australia is not only the only country watching the slowdown in China. So the Aussie dollar, after it started the year with a short squeeze rally, bad job numbers accelerated the descent back to the 88-cent area where we are trading right now. The reason behind the strong downtrend is the bad December job numbers that came in at 22,600 instead of 10,300 as the analysts forecasted. This number that it is trading right here, the 0.88, is the 3-year low. We will go back to the charts and I'll show you technical levels on a chart in just a little while. Central bank officials have suggested that the Aussie could be fairly valued at an 85-cent value, so that is 0.8500. The breakdown came on Thursday, in Thursday's trading session actually, and this breakdown opened a wide tradable void onto the monthly chart to the 85 area and even lower, and I'm going to show you on the chart. So let's zoom out a little bit to the monthly chart so I could show you how we stand right here. I have done a little price retracement from this most recent swing low onto the monthly chart from this low to this very high right here, and I could see the level right here is just trying to reach the 50% level of retracement, which is a healthy retracement for a currency, and this is the 85.50, close to $85 area. So this is going to be a focal point. Not only that, the central official banks look at this level to be a fair value for this euro dollar, but it is a 50% retracement as well into the technical level. The purple line right here is the whole number, the 88-cent level, and as you can see right here to the left hand side, back in 2009 and had a lot of trouble in this area before consolidating this cluster and continuing to new high, so therefore trading above the previous day's high and continuing higher. So right now, looking at the latest cluster that we have right here, and this is the monthly chart, you could see right now this bar right here represents the 20 trading days in January, so pretty much more than 2 weeks of trading, and we already traded below the support level that we have created right here back in, and this is early 2013 right here. So therefore, moving forward, we can expect a more steeper correction into the 50% area, just like the 85.00 for a core position. And I have to tell you that the trade of the week, it is a swing to a core position, seeing much more steeper levels ahead due to the slowdown of the economy in China. Zooming in onto the weekly chart, you can see much more clear the breach right here of the 88.50 area, and then continuing lower, trying to challenge new lows and testing new lows right here where we're trading right now. Now, zooming into the 4-hour chart, the picture is much more clear, and I'm going to zoom in on the hourly chart so you can see what I'm talking about right now. So we have a cluster right here that is formed by these highs at 88.25 and a low right here that was tested in very early today's session with a new low at 87.55 approximate level. So therefore, we have created this very weak cluster at this level right below this previous support from early in December. So right now, basing very weakly right here, we're actually double topping into this area on the 4-hour chart. So like I mentioned today in our Forex coaching session, we have a double top right here, and for most aggressive traders, you can actually initiate a short position right into the whole number at 88.00 and have a protective stop. And this is for a day trade idea, and also for a swing trade idea. And this stop will be anywhere above 8825 area. For a first target, look for the previous low support area, and that is the 8760 or 8750 area, and that is also a fulcrum area. If you initiate half of the position into the 88 cent area, you can actually have the opportunity below this low formed right here at 87.60 to add the other half of your position, and so you're fully positioned for a further move down to further targets. So let's zoom into the hourly chart so you can see much better how the consolidation looks on the hourly chart. And let me just grab right here a rectangle shape so you can see the price movement. You can see the consolidation right here that is contained by the support level that we've mentioned before at 87.50. And this high right here at 88.25. So if we break this area, we might enter into another short squeeze that would be above 8830, and that can propel it higher into the 8950 area. But if we maintain this area, and if we get contained price action below the 8825 area and continue to trade below this psychological 88 cent area, we can continue lower, and a break and a breach of the previous low of 0.8750 can actually propel it lower. Now, how low would that be? I see a first target at 8700 for approximate 100 pips, and a second target at 8650 for 150 pips. There is a three target, and remember, these are swing and core target areas. 8600 for approximate 200 pips, target 4 for 300 pips, and the 8500 area. And remember, that area is suggested as being a fair value, and then target 3 area at the weekly support at 0.8300 for 500 pips. So this is for a core position. So remember, the risk on this trade, I will give it a little bit of room, and I have a stop in place, a soft stop in place above 8950 area, so a little bit of wiggle room right around into this area right here. So if you're looking for a shorter term trade, make sure you respect this contained price action, and then again, make sure you place your stop above 8830 area. And you could actually initiate it if you're waiting for a conservative entry below the support line, 8760 or 8750. And look for targets moving lower into the previous mentioned numbers. This was my trade idea of the week, the Aussie dollar. Thank you so much for tuning in. Remember to visit our website. That is www.tradeoutloud.com. and make sure you visit our Forex page for the Forex results 2013. Since we have initiated the signal program, we have accumulated 2,800 pips. Now, what this means, well, if you would have traded with $1 a pip, and that is if you had a $2,500 account, you would have actually more than double your account, and your profit would be of $2,800. If you would have had a larger account where you will be permitted to trade with a full contract, that is $10 a pip, let's say that $10,000 or greater account size, you would have doubled your account size in 2013, only trading from the end of April to the end of December 31st, so 2,800 pips, resulting in $28,000. Thank you so much for tuning in. My name is Anka Metcalf. I'm with Trade Out Loud, and so happy to bring you the trade of the week.